What's going on, YouTube? My name is Chris, and I put on a polo to make this YouTube video. We're going to take a deep dive into the highly anticipated Berkshire Hathaway shareholder meeting that happened this past Saturday. This meeting was held virtually with no one actually in attendance due to the whole quarantine situation, including Warren Buffett's partner in crime, Charlie Munger. That's like Batman not having Robin. And in this case, Warren Buffett is definitely Batman. First, for those that may not know, what is Berkshire Hathaway? Berkshire Hathaway is an American multinational holding company headquartered in Omaha, Nebraska, led by the well-renowned investor Warren Buffett. They invest in private and public companies, private companies being Geico, Duracell, and Fruit of the Loom, and public companies being like Apple, Bank of America, and Coca-Cola. Berkshire Hathaway has grown into the 5th largest company in terms of market capitalization. They trade in 2 shares. Berkshire Hathaway Class A shares are currently the highest priced stock in the stock market, trading at a whopping $270,000, whereas Class B shares trade at a much more reasonable price at around $180. Now, on to the shareholder meeting. This meeting felt a lot like a history lesson. It was a little bit slow-paced, but deliberative message. I think some of the points that Warren Buffett was trying to convey were bet on America, seek long-term investments, not short-term investments, and no one knows what's actually going to happen in the markets, and all we can do is prepare. One of the main focus points for investors is what Berkshire Hathaway did with the unprecedented cash stockpile that they had. Ultimately, it turned out that they actually didn't do much, and they actually sold a position, which we'll go into in a little bit. Buffett subsequently increased Berkshire's cash stack from an already unprecedented $128 billion to just north of $137 billion. Yes, billion with a B. Every decade or so, dark clouds will fill the economic skies, and they will briefly rain gold. When downpours of that sort occur, it's imperative that we rush outdoors carrying wash tubs, not teaspoons, and that we will do. Here's how I break this down. Warren Buffett increased his cash stockpile. I interpret this as there's potentially more dark clouds to come, right? Otherwise, he would have invested his money and put out the figurative wash tub. One could assume that Buffett may not actually think that it's rained gold yet. While he didn't explicitly say so, he also didn't do much in Q1. Price action was actually really ugly in March, but with the rally in April, it made valuations way too high. I myself haven't really done much investing in April because I think the market has really outdone itself. You could come to me with something on Monday morning with something that involved $30 billion or $40 billion or $50 billion, and if we really liked what we were seeing, we would do it. And that will happen someday. I guess that someday isn't now. And he actually sold off stocks in April. He net sold around $6 billion or so, and of this, he sold all of his airline stock. The world has changed for the airlines, and I don't know how it's changed, and I hope it corrects itself in a reasonably prompt way. I don't know if Americans have now changed their habits or will change their habits because of the extended period. But I think there are certain industries, and unfortunately, I think that the airline industry, among others, that are really hurt by a forced shutdown by events that are far beyond our control. Buffett openly admitted that he had made an understandable mistake. I personally have stayed away from airline stocks during this pullback because I think that the industry is on thin ice. While I did invest very little into Boeing, I don't really consider this a pure airline stock as they also have other segments of the business such as defense spending. However, they will definitely be affected by this pandemic. It's important to understand Warren Buffett's investment strategy. He is making quality long-term investments, and by long-term, I mean forever. He's held on to Coca-Cola stock since 1994 and hasn't sold a single share since. Warren Buffett has come out on record saying he doesn't care if a stock loses half of its value. As long as it's a sound business and he believes in the long-term trajectory of the company, he is going to hold on to that investment. But he just sold all of his airline stocks. So that must mean that he doesn't think that the airline industry is a good quality long-term investment. And we're not just talking from a year from now, we're talking about in the many years to come. There are too many planes and the world has changed for the airlines, which have been especially hurt by the economic shutdown. Another thing investors wanted to hear from the Oracle of Omaha was his thoughts on the current market condition. What was his thoughts on the recent sell-off? Is this a buying opportunity, or is there more pain to come? Well, we answered some of these before. He didn't do much in Q1 and increased his cash position. I think this was his delicate way of saying he doesn't know. He spoke a lot about the Great Depression. I think the reason he spoke a lot about the Great Depression is because no one had any idea that the Great Depression was happening when it was happening. But now that we look back, we know exactly what it was. Same thing with this time. We don't know what's going to happen in the future, but when we look back on it, we'll know exactly what happened. Even with the Great Recession, the figurative train that is the economy fell off the tracks in 2008 and 2009. Versus right now, we took the train off the tracks and put it on the sidelines. There's not really anything we can compare this to, so he is staying put until more unfolds. The last point I'll make is, never bet against America. That is true today as it was in 1789 during the Civil War and in the depths of the Depression. Warren Buffett said to bet on America, but you need to be careful how you bet. How can you do this? By investing in the broad US economy, otherwise known as the S&P 500. He suggested this as a cheap option for those that aren't really sure what to do right now, as it will pay off in the long run. The range of possibilities on the economic side is still very wide. That's why you have to be careful. He said that these large vol events are unanticipated shocks to the market, therefore you should never use borrow money or margin. I've gotten the question, should I short the market? There's a lot that can go wrong with that, and both the Oracle of Omaha and I advise that's actually the opposite of what you should be doing right now, especially in the long run. There's a whole bunch more we could take from this meeting, but I think that covers a lot of what he spoke about. I feel that Warren Buffett conveyed a muted warning that while investing in America is what you should do, to be careful as there may be dark clouds ahead. He himself doesn't know what's ahead in the airline industries, for the economy, and for America, but ultimately investing in America is going to be a winning bet. I hope this was helpful in breaking down one of the most successful investors' thoughts, and hope you can apply this to your personal finances and investing. For more videos like this, make sure you hit the subscribe button and smash that like button. See you another time.